Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is August 31st. It's a Tuesday of 2021. We're going to go through our topics of the day and we're going to talk about what's moving markets. So thanks for watching. Our first topic of the day is if you happen to catch Larry Kudlow very early on Fox Business with Varney and Company, the former economic aide to President Trump, even back several decades back to Ronald Reagan, President Reagan, Mr. Kudlow basically reported that he brought something to the attention, the banter back and forth from Larry Kudlow and Varney, which was, we are still technically living in a Trump economy. Let me explain, because his point was very spot on, both of them. Basically, we haven't seen a change in the tax law. We haven't seen a change in the 2017 policies that were put in place under President Trump. Therefore, that's why we're seeing corporate earnings that were foundationally in the peak of 2019 going into 2020, pre-COVID, if you will, on a solid ground. Our economy was really gearing up. Corporate profits were all-time highs, unemployment were all-time lows, and in fact, everything was sort of just right where it needed to be economically speaking. So the foundation was solid going into the global pandemic. And fast forward, here's where we are today. Markets are back up. In fact, if you take that period of time, I think the markets have doubled under sort of since when Trump was inaugurated, and those foundational structures are still in place. Now that can change on a go-forward basis as Democrats are eyeing, when they get back together, to change this tax structure, but through the both bills that they have, the infrastructure and sort of the American aid, whatever they want to call it, those two big bills are anywhere from 4.4 trillion to, we've heard, as high as 5.5 trillion proposed, all in over the next 10 years. So what that means is, well, they're going to come for all of us from a tax standpoint. Our next topic is ultimately, it was a Wall Street Journal op-ed, and it's talking about Bernie Sanders is running out of billionaires. Well, what does that mean, Rob? Well, ultimately, if you take a look here, if Bernie Sanders has, according to Forbes, April 2021, they reported that at that point in time, there was 724 billionaires, basically, that Bernie Sanders could go after and try and tax here. And if he did that, that wouldn't equal all of the spending that is proposed in the bills right now that potentially could be passed in their current form. That would be spending plans of $4.5 trillion as proposed versus the net worth of the billionaires of 4.4 trillion. We would still come up short. And ultimately, as the Wall Street Journal op-ed reads, that if Mr. Sanders were to confiscate every asset of every American billionaire, from Jeff Bezos' rockets to Elon Musk Bitcoin to Larry Ellison's boats to Oprah Winfrey's houses, Ted Turner's ranches, Jay-Z's car collection, and the list goes on, he still would come short and the basically of covering the Democrat-led legislation of the two plans that are on a go-forward basis. So ultimately, as we know, Bernie's shtick has always been, as I read, us versus them, the Wall Street Journal reports, and the reality is that there's not enough of them out there for them to cover the costs of what's outlaid and proposed for the taxes. So what does that mean ultimately? The take-home point is that the tax man will be coming back sooner rather than later for all of the rest of us. And you bet your bottom dollar that that's exactly what's going to happen, because somebody's going to have to pay for all of the proposed spending. Again, we're safe right now. Markets have been up recently. In fact, close to all-time highs. Why is that? Because Congress is not in session. And as I was told when I first got into business, 25 years ago, that an older advisor said to me, the markets go up when Congress is not in session, or markets go up when there's gridlock in Washington. So we could see the setup maybe in a mid-cycle election in 2022. But in the meantime, right now, as we speak, Congress is not in session. All will change next week. You betcha. Keep an eye out for that, as the markets are ever changing on a daily basis. And our final topic of the day, which ultimately is, I think, the biggest news, is that Chief Economist for First Trust, Brian Wesbury, raise once again his S&P target by year end to 5,000. Now we're about the 4,500 level right now as we report today at the end of August. And why that's important, I think another firm, UBS, jumped on the bandwagon today shortly after Brian reported his sort of revision upward. Now he basically has a capital asset pricing model that looks at the current conditions of earnings as well as the 10-year treasury. And as of right now, if we look at sort of what we just saw. The second quarter earnings of all of corporations have been reporting, and there's a net jump of 9.2% in earnings over this last quarter, which is tremendous. Remember, we're still coming out of COVID, and it's a lot of uncertainty and supply chains issues, a lot of inflation built in, but at the same time, corporations are getting it done with less, right? There's still 10 million plus people that are looking for jobs or needing jobs, so on and so forth, but corporate America is still profitable as ever. And in fact, keep in mind, think about this, right, too. The pre-COVID peak of late 2019 for S&P earnings, we are up 15.8% and since that level. So like I said, as I started this broadcast today, we had all-time highs with a foundational Trump economy, everything going in the right direction. We basically had tax cuts and ultimately repatriation of money coming back in the U.S., and the dollar right where it needed to be, oil low. I mean, I could go on forever, but ultimately that is when the economy was humming along, and then we hit COVID. But it shows that the United States, corporate America, don't bet against America, don't bet against corporate America and the S&P 500, because they're roaring back with a 15.8% increase since the peak, which is tremendous. Now, what does that mean, Rob? Well, even Brian Westbury says, well, even if there's a what-if scenario, even if the 10-year Treasury rises from the current level of 1.3% just about to 2%, so interest rates rise, and you have corporate profits that go down by 36% from current levels today. So if you have those two things factored into their capital asset pricing model, they say that the fair value right there for the S&P right now is 4,500. And that's where we are today. So do we think interest rates will rise? Yes, we do. Do we think we'll get to 2%? Who knows? There's a lot of uncertainty out there, especially with the rise of the Delta variant. And that's what even the Federal Reserve Chairman Jerome Powell last week in Jackson Hole repeated his dovishness and his concern of what the Delta variant could do on a go-forward basis for the U.S. economy. But the reality is that we don't believe at Blanke Schein Wealth Management that the economy will shut down to a full extent that we saw in 2020. At least nothing of the sort, nothing even close. So we don't believe that we're going to see a decline in corporate profits of 36%. Remember, in 2020, we had a rise in profits of 2%, even with a quarter of a global shutdown, both here and around the world. But the U.S. corporate America still eked out a 2% gain in corporate profits, even in that calendar year. So where we go from here, who knows? You know what? The next target is the 5,000 level on the S&P 500. We will wait and see if Brian Westbury is right, if a few others are right. But you know what? Another thing to be said, don't bet against America, especially when the markets climb a wall of worry. That doesn't mean we're not going to have pullbacks between now and year end, but I think we'll take advantage of them for our clients because we're positioned properly. We've raised some cash and we're sitting on the sidelines in some cash positions waiting for opportunities. But corporate America has proven once again that they can and will continue to sort of grind through any type of market environment, whether it's concerns geopolitically, globally, economically, inflation-wise. We're seeing the power of corporate America here play out. So that's good news today. I know you needed some good news, and that's why we're reporting what we believe is most important as it relates to your finances. Thanks for watching, and we'll see you again next time.